Welcome to TradersArmy.com, defending your right to build wealth and preserve capital for generations to come.
Welcome everybody to the Daily Market Commentary. I am your host, Charlie, joined by my dad, Chuck Fulkerson.
Good morning, everybody. Welcome to today's edition of the Daily Market Commentary. I have the amazing Charlie here with me. We're going to take a look at the markets like I do each and every day, identifying 10 to 12 futures markets, looking for turning points and reversals. And we're going to learn what exactly some opportunities look like. For those of you new to the channel, click the subscribe button so that you get the alerts as they come out. So let's go ahead and dive right in. So which one should we look at first, Charlie? Which one of these four should we look at first?
I'll go with the ES.
So we'll start with the ES. Now, when I look at the ES, yesterday we had another down day. So now I've got some lower swing highs as well as lower swing lows. When I move to the 4-hour chart, we have not yet quite come back to our potential reversal point. So looking at the ES, going to a 1-hour chart, we have lower swing highs. And remember that a swing high looks like this. So when I'm looking at a swing, this would be a swing high, and this would be a swing low. Swing high, swing low. Then we had some that were kind of even, swing high, swing low. So now we've put in consecutive lower swing highs. So what direction does it look like we're going, Charlie? Up or down?
Dan.
Down, right. Looks like we've got kind of a downward move. The other thing to consider is that over the last couple of hours, we have what shape here kind of being formed?
Well, triangle.
Yeah.
And make that sideways triangle.
Yeah, so it's a little bit of a symmetrical triangle. So I've got slightly higher lows and slightly lower highs. So this typically leads to some sort of a breakout. Now this is called a bear pennant pattern. That's what that's called. That's a bear pennant pattern. And typically we would anticipate that to break out to the downside. Now, if that does indeed break out to the downside, we have a little bit of a potential reversal point right here at this 2865 area, right? This would be the area where we can expect a possible reversal. So the next level that I would look at is if we break out to the upside, we may also have a hard time getting through this area up here. So both those areas look like potential reversal points if we do break out of that triangle. All right, let's look next. Which one should we look at next, Charlie? So we looked at the ES. Which one should we look at next?
NQ.
So the NQ. So the NQ is the Nasdaq. Now, the NQ this morning, we are down. We are down about 18 points this morning. There's the negative 18 in front of us. And we had a possible trade in the NQ yesterday. We had two of them where price came down in. Now let's go to the 15-minute chart. I want to dive into the 15-minute chart. Now a dashed line means that when price comes into the level, it's activated. The trade is activated. And then we came out of it and then immediately went which way, Charlie?
Down.
We went down. So when we go down, if we think it's going to go up, but it goes down, is that what we want to see happen? No, because that's how we lose, right? Now, why did this level not work? I said yesterday in the recording, I was not a fan of the way that we were basing before the level, which is why we switched to a dashed line trade. So this level blew right through. Well, how about the level below it? That also blew right through. So both levels did not work yesterday. Both levels failed on the Nasdaq, and the Nasdaq has really, really been taking it on the chin. This has been the worst of the markets in its performance. And so right now, if I'm looking for a reversal, I think I'm better off looking at the ES than I am at the Nasdaq. Now, we still have these two huge moves down, and both of them came right at market open. So right as the equity markets opened is where we saw those big reversals come down. But Charlie, what do we see here? Again, the same shape right there. What shape do we have there? Three sides is a
triangle.
Triangle. Now,
it also looks like the bear shape you were talking about earlier.
Yeah, it's the bear pennant pattern. So a bear pennant pattern looks like this. Down, and then it does this shape. So that would be a bear pennant, because remember, bears attack going which way, Charlie?
Down.
How do bulls attack?
Up.
So if I were to draw a bull pennant, it would look like this. Now, we expect typically that in a bear pennant pattern, we typically expect a breakout, and this is a measured move, so we typically expect it to break out next to the downside. Not always, but that's typically now. But it's supposed to move. Traditionally, it moves about half the distance of the length of the pole. That's the traditional measured move of a pennant pattern. So in this case, look at this distance here, from here to here as our pole. If I take half of that move, if we break out to the downside, I think it's realistic to anticipate price coming down into this region here, 76.35. Now, I don't like to short the market when we're this close to an all-time high, typically, but we have a potential for a breakdown out of this level. Because right now, the bottom of this pennant is acting as the floor. And when price goes through the floor, what happens when something falls down through the floor? Charlie?
It goes to the next floor and then bounces up?
Right. The idea is it'll fall to the next floor. So, I've got another floor of price down here. With this area here could be our next floor for price, for a potential reversal.
That looks like a close ceiling and floor to me.
Yeah, it does. It kind of looks like a close floor and ceiling where they're kind of tight together. But this is the base of a what? What does it look like we just drew here? Yep.
A mountain.
Yeah, it's like the base of a mountain. So when we get back to the bottom of a mountain, who's going to take over at the bottom of the mountains?
The bulls.
Right. So the bulls take over at the bottom of a mountain. But in order to get to the bottom of the mountain, which way does price have to go?
Down.
Right. Price has to go down to get to the bottom of the mountain. And that is how we train the kids. All right, so let's look at crude oil. So yesterday, I don't know if anybody was able to catch the short in crude oil yesterday, because yesterday CL, which was a very strong setup, we had a short on the breakdown below this level here. So price broke below our CL entry and immediately moved down. Got to where we got to lower than what we anticipated for our profit target, and then it's bounced back up. So leave me a line in the comments below if you're able to get this. But now, what does it look like we've put in overnight? Another little what here? What does that look like, Charlie?
A candle, and also that little line.
That little line is acting as our floor. So that's another opportunity that if it breaks below the floor to do what? If it goes below the floor, which way is it going to go?
Down.
Down until the base of this what?
Mountain.
Mountain. And then who takes over at the base of the mountain?
The bulls.
Right. So what do we, by the way, when the bulls take over, what action do we take? Do we buy or do we sell?
Buy.
Right. We push the buy button. Good job, buddy. All right. So that's what I would look for today. I think we can get another breakdown out of crude oil. Yesterday worked out really, really well. For those of you in the live trading room yesterday, we actually had talked about the fact that we had some consolidation in here to give us a little bit earlier of an entry. If you were able to jump in on that one. Now gold, we had a little setup yesterday for a potential reversal off of this. All of these wicks in here that were kind of wick over wick over wick. It was kind of a messy area, but it did turn out for a decent little reversal trade. we've come back in and retested the area. So if you took this trade, I'd be very interested in just kind of moving up your stop to break even and protecting what you have since we have put in lower swing highs. So move your stop to break even, maybe even take some profit off the table if you're so inclined. But this worked out for a pretty nice little move for those of you that were able to catch it. I'm going to remove this level now, though, because there's nothing we can do on it at the moment. Let's take a look next at the bonds, and then the Aussie, and the Euro, and the Canadian. Okay? So let's first start with the bond. So yesterday, I took off our bond level that I'd had on there for weeks and weeks and weeks, and we still haven't met it. It was this area down in here, but we took it off of our chart simply because we were just basing too much in front of it. So no real love for that bond level. Nothing I want to add on the bonds, especially going into a Friday. Now, the Aussie, I had a breakdown in the Aussie below this level here, and we did finally break down below it and gave us a nice little move, and now we've kind of come back up to it. So those of you that are if you jumped into this one based on coming back up to it, you've got a little tiny profit. I would protect that for the most part and move your stop to break even so that you minimize that risk. If we look at the euro, here in the euro we have a little bit of sideways before a very strong move down. So this becomes the top of a slide, and then we see that price has fallen from that top of that slide, and now we still have an area that we could get a reversal, but the fact that we've based below it a little bit tells us that it's a little bit weaker of an opportunity. So what I'm going to do is change those lines from solid lines to dashed lines because I don't feel as much conviction in the level as I did in the past. So that means we wait for the confirmation entry. In the Canadian dollar, so in our Canadian dollar trade, we got a, for those of you that got in it, you may or may not, depending on where you put your activation line in here, it touched the activation point, and it has rocketed out of that level since touching the activation point. So now I would definitely take your stop and move it up to at least under here to lock in some profits. For those of you, if you were able to catch it, it really depends on how tight you put your activation point. It touched that halfway point. So at that halfway point is where your activation point would be. So it should have gotten executed on that level. Last but certainly not least, the Great British Pound and the Japanese Yen. We have come back to some areas in both of those, starting first with the Japanese Yen. Now, looking at the Japanese Yen, the first level we hit, we went right through it. So that would be a stop out. But look at our second level. Price touched here and immediately went
down.
Down. We immediately went down. Now that price is going down, Charlie.
Speaking of that, so it cannot go down past the line. It cannot go down past the line, but it can just touch the line.
Yeah.
That's why it said rocketed.
Yeah, it rocketed up right out of there like a rocket ship going to the moon. But then it's coming back down off of our little level. So this trade's working out really well. So the other one was a stop out. Now, it can go below this line, but if it does, that's where we protect our trade and we place a stop loss, right? So we don't lose too much if it goes down. So those of you that were able to catch on that Japanese yen, if you got stopped out on the first one, you did have a better opportunity at the second one going forward. Copper, we've still not come up to the level which has been identified earlier this week. Nat gas has come down to our level, but I do not like the way that we're moving out of this level. Matter of fact, on this one, I'd be very tempted just to close it out for where it is and take the profits. Since we based just before the level, we hit the level, we came out of it with a terrible basing, and then we've come back into it overnight, and we're still just kind of above it. So just protect what you have in nat gas. And then the British pound, we had set up a little bit of a level yesterday, and that level also got a little bit of a stop. But remember, these tiny stops are going to happen, right? And this has been a really good week for learning, because when you have, in the world of trading, you've got different outcomes. You've got 4 outcomes: big winner, big loser, small winner, small loser. And when we look at our trades, over yesterday, if I look at all 12 of the markets that we look at, we had stop outs in the NQ, But the stop outs in the NQ set us up today for some good opportunities. So the stop out itself isn't bad. It sets us up for better opportunities. But we had, winning trades in crude oil and in gold to offset those stop outs. And then if you slide over to your currency markets, you had the Canadian dollar, which was a really nice run, but offsetting that was your stop outs that you had in the Great British Pound, as well as in the Japanese yen. Now, your Japanese yen trade, you had the one that worked out well, and then the one that was a stop out. So I know it was kind of a long one today, but I wanted to go over and do a little bit more lessons in education side. For those of you that do not know, everybody should go to tradersarmy.com. Take a look at our live trading room. We've got a lot of free videos up there and some classes. If you're not familiar with options, tradersarmy.com, you've got probably 20 to 30 hours of options content for subscribers. So go take a look at it, see if it's something that you like. Charlie, tell everybody to have a great weekend.
Bye.
All right, we will see you soon.